I understand. Shu Tian, when you look at market conditions, when you look at credit spreads, what are they telling you about where the default risk is highest in this region? Is it still amongst Chinese property developers, or is it in the frontier end of the markets here, like in Sri Lanka?
In the report largely focusing on ASEAN plus PRC and Hong Kong, we overall see, well, there are some sectors, for example, on the high yield and then also PRC also, we see a wider premium spread. And then overall, I think because of the recent change in the financial conditions, the Fed tightening, and then also the geopolitical tensions, so the overall investment sentiment is weakened. So we see also a prevailing widening spread to all the sectors too.
So far, it's South Korea and Singapore that are tightening monetary policy, Shu Tian. Will more follow, given this heightened inflation threat? And where does that leave financial conditions, liquidity and bond flows?
I would say so far, from ASEAN end, expect for Singapore, what we currently see, like a central bank in Indonesia and Philippines, I think they decided to leave the current monetary policy unchanged. I think they are still watching the conditions. It's quite a dilemma. On the one hand, there is inflationary pressures, and on the other side, they still need to support the recovery is not complete yet. So I think they are still staying vigilant and see what is going to happen. But so far, the monetary stance and in the region is still accommodative. But at the same time, we do see that where the U.S. tightening is already kicked on, and then also the ECB, and they also announced some tapering arrangement. So we do expect the liquidity conditions to further shrink. I think this will also be part of the conditions of the monetary decisions in the region. And then this definitely have an implication on both the liquidity and to support the equity markets. And then also it has implications for portfolio flows, which has will affect the currencies. Yeah.